What's it going to take? And I guess a follow-up question to this is we're seeing this massive influx of retail money enter the market on the back of the Robinhood and all the discount brokerage firms. Why has this money, Peter, ignored the commodities sector so far?
Well, I mean, I know obviously all the money hasn't ignored it. Commodity prices are very, very strong. Sure. But I think in general, people trade in the rearview mirror, and the commodity story is new. The NASDAQ, social media, I mean, this story has been there, and I think the public invests in the rearview mirror, not looking through the windshield. So it doesn't surprise me that retail investors, haven't caught on to what's happening or, how things are about to change. But, what's irrational right now, I mean, obviously wanting to get out of U.S. currency makes perfect sense, right? So the fact that people are looking for other assets, because the U.S. dollar is a guaranteed loser. I mean, the Federal Reserve has told you this, right? We want 2% inflation every year. And of course, they're going to get a lot more than 2%. But we had an inflation problem when the goal was price stability. When the Fed was promising stable prices were going up. But now that they're promising that prices are going to go up, imagine how much higher they're really going to go up when this is actually their goal. So the Fed is telling you, you're an idiot if you hold on to dollars. I mean, either spend them now and buy something, because if you hold on to them, whatever you want to buy is going to cost you more in the future. Okay. But if you don't spend them, then you got to find a place to store them. And so there are people, they're buying stocks. But they need to realize that there are much better stocks to own than the overpriced stocks that dominate the U.S. market. And I think right now, investors are still reading from an old playbook, because as interest rates are rising, the natural tendency of traders is to think that this is a bearish development for gold, because typically when rates are going up, the Fed is now raising rates. That's been a headwind for gold. But what the market has to understand is that it's very different now, because the Fed is not going to respond to rising market interest rates by raising short-term rates, right? They're not going to respond to an uptick in inflation by trying to fight it by tightening monetary policy. In fact, it's going to be the reverse. What the Fed is going to do in response to rising interest rates is print even more money, because long-term interest rates are rising because inflation premiums are rising, because the market is sensing more inflation, and so they want to build in a larger premium into the bond market. But the Federal Reserve, because it has created this massive bubble and encouraged so much debt, the Fed cannot allow the market to raise rates, because indebted American companies and the overly indebted U.S. government won't be able to afford to service its debts if rates go up. So instead of trying to fight the increase in inflation, the Fed is going to stoke the fire. The Fed is going to respond to an increase in long-term rates by printing even more money and then using that money to buy long-term bonds to artificially suppress their price. And so instead of fighting inflation, the Fed adds to the inflation problem. And now whatever inflation was causing people to sell treasuries, it's now gotten worse. The Fed is making the inflation problem worse as it responds to the rising interest rates that are a manifestation of those fears. Right. So this is not what we had in the past. So investors have to realize that the higher inflation goes now, the higher it's going to go in the future.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
The Fed is not going to fight it. The Fed is going to surrender to it and basically fight fire with fire. The more inflation we get, the more inflation the Fed's going to create. And this is an environment that we've never seen in the United States for gold. And it's going to ignite the biggest bull market we've ever had.
Peter, we talked a lot about rising inflation. I'm curious to get your thoughts on how much that is a contributing factor to, call it, the rise of populism on both the extreme left and the extreme right, civil unrest, and everything we've been seeing. I mean, I'm not American, so I'm an outsider looking in. But how much are these underlying factors contributing to people's unrest right now?
Well, first of all, I don't even know, there's no real extreme right anymore. I mean, The extreme left is socialism. And if that's the case, the extreme right would be, free market, libertarian, laissez-faire, stuff like that. And, Trump was kind of in the middle and he leaned left. He wasn't even, as far as I'm concerned, on the right side of the political spectrum, if you're going to put socialism on the far left. But he was a populist, but he believed in big government and he wanted to pay for it by printing money. He wanted to run deficits, but he didn't want to raise taxes to fund government spending. He wants to print money. And so the left is, certainly wants to do that too. I mean, look at how Donald Trump went out. The last thing he did was threaten to veto a spending bill because it didn't spend enough. He didn't want the government to mail out $600 checks. He demanded $2,000 checks. Right. And of course, the Democrats are more than happy to oblige, and they forced the Republicans to be the bad guys standing in the way of all this free money. But we're just going to move even further to the left. And I think because Donald Trump led the Republican Party to the left, he enabled the Democratic Party to go further left without being out of the mainstream. I mean, Trump actually helped to bring socialism into the mainstream of American politics by taking the Republican Party so far left. He gave the Democrats that room to maneuver. And yeah, I mean, the inclination as soon as they get in there is going to be to have all of this free government and just pay for it by printing money. Now, yes, I mean, there are going to be tax hikes on the rich. I mean, no question about it. That's happening. But those tax hikes on the rich are not going to raise anywhere near the amount of revenue that is going to be required to pay for all the spending. Mm-hmm. So even though the government's going to raise taxes, the deficits are going to get much, much bigger. But the real tax that everybody is going to be hit with is the inflation tax, because all government spending needs to be paid for. And, the politicians can pretend we're getting it for free, but we're not. When they print money and spend it, they are taking our purchasing power. They are destroying the value of the dollar. They are causing prices to go up. And those price increases are tax increases, because government doesn't have any wealth. Anything it spends, it must take from the private sector. And so if it doesn't do it honestly, through taxation, it does it dishonestly through inflation. And so Americans are about to pay the most onerous inflation tax ever paid by any generation of Americans. And, my goal is to try to help people avoid that tax to the greatest degree possible. And the only way to avoid it is to get out of what's being taxed. Inflation taxes your dollars and any of your investments that are denominated in dollars. So if you don't want to pay that tax, get out of the dollar now before it goes down in value and you get into these foreign assets, gold, emerging markets like we discussed, foreign markets, foreign currencies, anything that is outside the US dollar.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.